I even have people that just wants to sell their home now because their insurance carrier is no longer doing business or the renewal is just ridiculous.
Non-admitted carriers, they're just not regulated by the state, so they can change their rates whenever they want to. And clients are like, well, how do I know if I have a claim they're going to pay the claim? The best indication we have of these carriers is their financial stability ratings.
I am really looking forward to this live stream today just because, we've been getting a lot of the viewers asking about insurance. People would say things like, man, my insurance just dropped me, or they didn't renew, or I'm trying to buy a house and I'm delayed in escrow now because it takes like 15 to 20 days for the whole policy thing to get rid of. So that's why we're so glad you're here today, Chris, so that way you can kind of go over all of that and talk about the changes. So yeah, man, why don't you kind of introduce yourself and then we will go from there.
Sure, yeah. My name's Chris. I'm the owner of Kamara Insurance Agency here in the Sacramento area, and we're a small local agency, and we're just trying to help people the best we can.
Why would a company drop a client? What's the positive outcome from that?
So think about it this way. You've got 10 pairs of Jordans, right? And you wear one every day, and you keep them clean as you can keep them. But at the end of the day, they're worn. Is it worth it to you anymore? Do you drop that one? Do you wear another pair of Jordans? So basically, the carriers are looking for the best risk, right? They want to write good business, and they're finding that they need to fine-tune their portfolio. So they're looking at their whole portfolio, all the houses, and they're like, well, we've got experience knowing that, as a good example, the law of large numbers is a great thing. They've got all these actuaries and they're smarter than us. They know all these moving things. But one great example is if someone files a claim, the likelihood that another claim is going to be filed increases by a huge amount of percent. If you file one claim, the likelihood is you're going to file another claim. You think the carrier wants to pay another claim after they've already paid one? They're doing that by sharpening their pencils and looking at where the good risk is and where they can make some profit versus having to pay claims for every single risk.
So basically they're cherry picking.
Absolutely. That's how I would say it too.
Isn't that kind of unethical?
How so? They're running a business.
Because now you're kind of picking and choosing who you want to do business with, right?
Don't you? I'm sorry.
It depends. Well, it depends. It's kind of like, for example, right? If I have a client that comes to me and says, hey, I'm looking to buy a home, I'm not going to treat them any differently if their credit score was bad versus somebody that came in with like 800 plus. The process is just going to take longer for that person that doesn't qualify right now. I might need to follow up with them and nurture them for like 2+ years to get them in standing position versus this other one where their credit score is great, everything's in line. They buy a home within 2 months, Great
example. So we'll take that example, right? That same client, and we'll say that they have no problem with their credit. They have perfect credit, and they're like, Chia, I want to look at these 30 houses this weekend, and I need you to take me to every single one. Oh, I don't like those. The next weekend, I want to look at 30 houses. Next weekend, I want you to look at 30 houses. Next weekend, I want you to look at 30 houses. And they don't do anything and never buy, and now they've wasted weekends and weekends of your time. Do you still want that client?
It depends. But do I like the person? Do they like me? Because I've done that. Everything that you just mentioned, I've done that before. Like sometimes it'll take me 4 years to close on a client, right? To where they finally found a home. Maybe it's just me. I like to always give people the benefit of the doubt to where maybe something's going on behind closed doors. They probably lost a family members, delaying the process. They saved a bunch of money. They were planning on using that for the down payment for a new home, but something happened. Now they got to use it. They're not going to tell me all their personal bits. So I'm giving people the benefit of the doubt.
The carriers aren't your friends. They're in business, right? So if they're losing money on certain clients, then they're going to want to not have those clients.
And then there's no obligation for insurance companies to...
Well, you're not biasing it against someone's credit score or anything else. You're looking at it from a purely financial lens. Is this a good risk for us?
And it's like having an employee that is causing, a lot of damage and they're causing complaint calls, things like that, things that are costing the company money. Eventually, you're going to have to let that employee go because they're costing too much money. Yeah.
No. I get everything that you guys just mentioned. I just like to kind of play devil's advocate and get another perspective of things. I feel like sometimes these things happen and it creates lawsuits, and then lawsuits create new policies, and policy creates thicker contracts for the application just to get the same job you did 2 years ago, right? So that's why I asked, because some people don't understand that. The other day, right, I got a client in contract with a new build, and I saw something in the contract. I'm like, I've never seen that in there before. Why is that in there? And some of these things are disclosures that's super ridiculous. But It's because there was a lawsuit that happened about that, and now they're putting it in there to prevent it from happening again.
California has one where now a seller must disclose the wildfire readiness, and it's probably not the right words, but they have to disclose the wildfire risk associated with the property they're selling, and the buyer can waive that disclosure. But that's part of your real estate transaction is longer now because it has that in there. And I think it's been there maybe a year or two.
Yeah, ever since all those wildfires, there's a bunch more new disclosures for that area, for those areas.
Correct.
Yeah.
So, Chris, I'm curious. So, as a business owner, are you getting any pushback on any of these carriers leaving California, as well as covering some of these California businesses, especially the small businesses? Are you getting any of them that are leaving as well for the same reasons?
On the commercial side, it's not as bad, but it is getting there. I will tell you that Auburn, as a good example, is like a black hole. Almost no carrier is wanting to write in Auburn at the moment. None of my admitted carriers will write in Auburn, as an example.
Only commercial though, right?
None of my admitted carriers from personal, meaning homes, or business are writing in Auburn at this moment.
What?
Are they giving any explanation as to, I mean, that's not like a big fire area. I mean, well, sort of. I mean, it kind of is.
Right now, everything's considered a high fire area. Even Rockland, Penryn, Loomis, even Woodland, you go out that way. Elk Grove has grown exponentially, and you look down towards further south in Elk Grove, and there's subdivisions. There's nothing but fields around them. Those are not considered wildfire risk. And then, so just to touch on admitted versus non-admitted carriers. So admitted carriers are filed with the state. They're regulated by the state. And there's a fund that if these carriers are insolvent, the fund will step in and help the clients. Non-admitted carriers, they are still selling insurance products in California, and we sell quite a bit of it. They're just not regulated by the state, so they can change their rates whenever they want to. The reason that they're there is, again, they're seeing opportunity, Charles, like you were talking about, and clients are like, well, how do I know if I have a claim, they're going to pay the claim? The best indication we have of these carriers is their financial stability rating. So Demotech and AM Best rate these agencies, and we sell A Best rated agencies. So they have the financials that show they will be able to pay claims in the case of catastrophic losses.
It is crazy how all of this is happening. So that leads me to my next question. Do you feel it's gonna get better for the consumers anytime soon?
We're hoping so. In December of last year, we're hoping that the state legislature would be making some changes to current laws that would make it more so that the carriers want to participate. And that didn't happen. And I know it's queued up, absolutely queued up for this year. And we'll see if those changes happen, how quickly the carriers will adapt and come back in. But I don't believe there's any way to force these carriers to write business unless it makes sense for them.
What's the typical question you're getting from a lot of your clients right now?
A lot are like Berkshire Hathaway Guard was writing a ton of business in California. Elk Grove, Sacramento, etc. You could get a homeowner's policy for $600 or $700 a year. Those days are gone. I don't know a single carrier that'll write this homeowner's policy in the Sacramento area for anywhere near $600 or $700. Your average policy, let's say in Sacramento, for a standard 3-bedroom, 2-bath house, you're probably looking at closer to $1,200 to $1,500 a year. You know, it's like $100 a month, something like that, which isn't super high. But then you go into the foothills, and I'm quoting people that are getting non-renewed. They're getting 200, 300, 400% increases. As an example, the last one I had, somebody had $1,700, and I was quoting them closer to $3,600.
Is this new policy or is this renewal?
These are non-renewals, brand new policies.
Are renewals with existing clients this high too?
I would tell anyone that's getting a renewal from an admitted carrier to do everything you can to keep it. There's no grass is greener right now. It's just so much carriers do not want to write that you're better off. If you get an admitted carrier that's giving you a renewal, you're probably better off staying there because that carrier is regulated by the state and they can only increase rates as much as the state allows.
Oh, okay. So, it's funny because I use auto insurance. I used to every 6 months before it renews, I would always shop. And I stopped doing that a long time ago, ever since all of these rate changes. So now I don't even recommend anybody doing that anymore to shop rates. because it's just so ridiculous now. Like I even have people that just wants to sell their home now because their insurance carrier is no longer doing business or the renewal is just ridiculous and they just can't afford it anymore. You know, it's not even about the interest rates anymore. It's about the insurance rates.
It's a factor. Yeah, I do a lot of quoting for my referral partners, like realtors, when their clients are shopping, let's say, you know, like El Dorado Hills. It's crazy. El Dorado Hills, right south of Folsom Lake. You can talk like private, like gated communities like Serrano, and it's super hard to write insurance there. It becomes a factor when you're talking about $300 a month insurance payment, $400 a month insurance payment, if not more.
Yeah, I had a client that recently closed on a home in El Dorado Hills. When we got into contract, the rate that the rep gave them before their pre-approval and all that changed so much within 60 days. We almost ended up canceling just because it changed their payments drastically in El Dorado Hills.
Yeah, the last 3 months of last year was pretty fluid. Rates and carriers were changing very quickly.
You know, my conspiracy side is telling me to, in my opinion, it's telling me the reason all of this is happening is because they just want everything to slow down. You know, kind of like before when Jerome Powell wanted everything to slow down, so to combat inflation. I feel like that didn't really work. People are still kind of out there, you know, and complaining about inflation and all that. They still didn't stop. I feel like this is kind of like the last straw to make everything stop.
I don't know, because if the carriers all leave, then you got the fair plan, right? And the fair plan is not cheap, and that's run by the state of California. I don't know how that would work from the insurance agent perspective. I'll tell you this, Florida has a lot of catastrophic losses. They have hurricanes and other things. Their number one insurer in Florida is the state-run program.
What?
And even that's expensive. We're not there, but there could be a day that the California Fair Plan is the number one carrier insuring Californians here.
So basically they got to the point where there were so many claims from so many hurricanes and all this catastrophic
All the
weather
carriers
that they
said, nope, we're out.
said, I'm not doing this anymore.
Gosh, this is crazy. Number one in Florida
Is the state-run program, yeah. Just like the equivalent to the Fair Plan.
Wow, that's kind of scary just hearing that.
When you think about it, though, then where does that money come from, right? So
Great
it's not
question.
going to be.
I can tell you the answer. So think of it this way. The California Fair Plan is administered by a department in California, but they don't have the money to pay what a carrier would pay. The admitted carriers, let's say State Farm, it's the largest insurer in the country. I believe it's the largest insurer in California. So let's say, make up numbers again, but let's say State Farm insures 20% of all Californians. Let's say people are insured with the California Fair Plan and we have a catastrophic wildfire. So a whole bunch of homes burn down. Let's say there's $10 billion in losses. As State Farm has 20% of the market as an admitted carrier, they pay $2 billion because that's 20% of that loss. So even without wanting to pay it and taking their ball and saying, we're not writing any new policies, because they have policies in California, they're still on the hook for wildfire costs. All the carriers are paying it.
And then this is why at some point then they end up leaving because they're like, I don't even want to mess with this anymore because then they're just going to get money from me anyway. So we're
let's
still
take
going
an
to lose out.
example like Berkshire Hathaway Guard, which was writing these amazingly affordable policies. And they decided late last year to completely leave the market.
Wow, this is it's kind of disturbing.
They announced on June 5th that they would be stopping writing new policies. And on July 21st, they decided to non-renew any policies as the policies end. So they completely exited the market. Now, if we had a catastrophic wildfire and all these people with the Fair Plan, there was 10 billion in losses, they don't owe any money for that because they're no longer writing in California. Does that make sense?
I see.
Yeah. So does any of that money come from taxes though? Because you just mentioned there's 2% of that, right? Where does the rest of it come from?
All the other carriers.
All the other carriers. Okay.
Yeah. Ultimately,
if they're doing business in California and it happens, they're part of the pot.
But think about it this way: who's paying for the carriers' money? Me and you. It's from our premiums. So ultimately, we're on the hook for those losses.
Yeah.
With that, again, Chris, thank you. I'm gonna log us out. And we're going to let you guys go, okay, Chi fams? Thank you again. Take care. Peace out.